AI's monster quarter, everything the market reported in Q2 in 6 minutes. Here's a number to start with, 258%. That's how much SanDisk stock rose in 3 months. Not 3 years, 3 months. And it wasn't even the strangest thing that happened last quarter. Between April and June, the AI trade printed numbers that would have sounded like typos a year ago. The Philadelphia Semiconductor Index just had its best quarter since it was created in 1994. 2 memory companies crossed $1 trillion of market value, and the quarter ended with the biggest IPO in history. This is the full story of Q2, the winners, the sleepers, and what it sets up for Q3. Chapter 1: The Scoreboard. Start with the monsters. SanDisk up 258, Micron 242, SK Hynix 228, Intel 216, Zhipu, China's first listed AI model company 203, Marvell 201. Every one of these names tripled or close to it in a single quarter. The engine underneath all of them, memory and AI infrastructure demand. Now the giants in a totally different picture. Alphabet led at plus 24. Nvidia, Apple, and Tesla all landed around 14. And here's the surprise, Microsoft basically went nowhere, up 1%. Meta actually fell 1.5 points. The market spent the quarter paying for chips and memory, not for the companies buying them. Chapter 2: The Revenue Leg. Who actually books the money? In the quarters reported this spring, Amazon $181 billion in sales, Apple $111, Alphabet $110 with Google Cloud growing 63%, Microsoft $83 billion, Azure up 39%, and Nvidia, a chip company, now books $81.6 billion a quarter, a chip company neck and neck with Microsoft. The Silicon League is wilder. Micron $41.5 billion, more than TSMC, which builds chips for nearly everyone, SK Hynix $35.5, Broadcom $22 billion, and its AI chips alone did $10.8, up 143%, AMD at $10.3, and SMIC, China's biggest foundry, at $2.6, a reminder of how far the gap still is. Chapter 3: The Profit League. Revenue is vanity, profit is the scoreboard that matters. Alphabet $62.6 billion of net income in one quarter, up 81%. Nvidia $58.3, Microsoft $32. Then the shocker column, Micron at 28, SK Hynix at 27, memory companies outturning Meta. 12 months ago these two were fighting over scraps. And the margins tell you why. Micron's gross margin hit 84.6%, luxury brand territory from a business that used to be a commodity knife fight. Nvidia 75, SK Hynix ran a 72% operating margin, TSMC 66 gross. When supply is scarce and demand is desperate, the seller names the price. That's this entire market in one sentence. Chapter 4: Growth and the Great Divide. Put revenue growth next to profit growth and the market splits in two. SK Hynix, revenue up 198, operating profit up 405%. Meta Group profit 61%, TSMC 58. Microsoft, a very respectable 23. Tesla 17, same economy, same quarter, one group compounding like software, the other printing like a commodity supercycle. And then there's Micron, which needs its own axis. A year ago, quarterly net income $1.9 billion. This quarter, 28.2. That is not a growth rate, that's a different company wearing the same ticker. 15 times more profit in 12 months. Chapter 5: The 5 stories that define the quarter. Story 1: The memory supercycle. Micron's single quarter, $41.5 billion, was bigger than its entire previous fiscal year. Both Micron and SK Hynix crossed $1 trillion of market value this quarter, something no memory company had ever done. The RA apocalypse, as traders started calling it, became the defining trade of 2026. Story 2: Nvidia's quiet record. An $81.6 billion quarter, 85% growth, and the stock barely clapped, up 15% while memory names tripled. Data center alone did $75 billion. When a record quarter counts as boring, that tells you where expectations live now. Next test, guidance says $91 billion. Story 3: The quarter's final plot twist. On July 1st, word broke that Meta plans to sell its Spare AI Compute, a cloud business. Meta jumped 9%. The same headline vaporized the memory complex. Micron down 10, SanDisk 11, CoreWeave 14, and overnight SK Hynix dropped almost 15% in Seoul. The biggest buyer becoming a seller, that question now hangs over all of Q3. Story 4: The biggest IPO in history. SpaceX listed June 12th at $135, popped 19% on day one, dipped below the offer price, then finished the quarter around $170, up 26% from the IPO. Its first earnings report ever lands this quarter, and nobody outside the company has seen those books. Story 5: Tesla's paradox. Q1 numbers were fine, $22 billion revenue, profit up 17%. Then July 2nd, the best delivery quarter in company history, 480,000 cars, beating Wall Street by 74,000. The stock fell 7% anyway. At 390 times earnings, even record-breaking is just meeting expectations. Chapter 6: What it all means. Here's the through line. In Q2, the money moved from the companies talking about AI to the companies invoicing for it. Memory and silicon tripled, the megacaps that buy their chips went sideways, and by quarter's end the market started demanding receipts. Record Tesla deliveries sold off, a record Nvidia quarter got a shrug, and one competitive headline erased $100 billion of memory market cap in a day. The easy phase is over. From here, every single earnings print is a referendum. Chapter 7. Mark your calendar for Q3. Every referendum has a date. July 15th, ASML expected, then TSMC on the 16th, the preview of everyone's demand. Tesla July 22nd, Intel and Samsung the 23rd. The Super Week starts July 28th, Microsoft confirmed, then Meta, ARM, and SK Hynix expected, with Alphabet, Apple, and Amazon the same week. August brings AMD, SpaceX's first report ever, and SMIC. August 26th, Nvidia, the big Zhipu September 2nd, and Micron closes it September 29th. We cover every one of those dates the day they drop, the numbers, the after-hours move, and what actually changed in about a minute. If Q2 taught us anything, it's that this market punishes people who react late. So subscribe right now, turn the bell on, and I'll see you July 15th for round 1.